Hi everyone, and welcome to lesson number 2 in Travel Hacker University. This is a series of videos that you find on our channel where we're sharing the tips and tricks that we've learned to really benefit the travel that we know and love across our beautiful world. Today we're in lesson number 2, how credit cards work. So let's start with credit cards versus charge cards. The key difference between credit cards and charge cards lies in how the payments are managed and the flexibility they offer in carrying balances. With credit cards, you're allowed to make purchases up to a predetermined credit limit, which is set by the card issuer based upon factors like your income and your credit history. As a card holder, you're required to make at least a minimum payment each month, but you can choose to carry a balance from one month to the next, accruing interest on any unpaid amounts. We'll talk more about that later. Credit cards offer flexibility because they give you the option to pay off their balances over time, albeit with interest. But additionally, many credit cards come with reward programs such as cashback, points, or travel miles, and may offer introductory 0% APR periods. Charge cards, on the other hand, typically do not have a preset spending limit, giving you more flexibility in how much you're able to charge. However, and this is crucial, the big difference is that the entire balance must be paid off in full each month. Charge cards do not allow users to carry a balance over time, meaning that there are no interest charges, but failing to pay in full can result in hefty late fees and potentially damage your credit score. Charge cards are much less common than credit cards and are often associated with premium brands like American Express. They offer luxury perks such as travel benefits, concierge services, and access to exclusive events. So remember, credit cards provide more flexibility in the payment options, but you can carry a balance and pay interest, while charge cards require full payment each month, offering no revolving credit, but often feature higher spending limits and premium perks. Now, both types of cards can be valuable depending on your spending habits, your financial goals, and the context of travel hacking opportunities to amass points and miles. Credit card loyalty programs. Early in the 1950s, consumers were introduced to cards such as the Diners Club card and American Express. Charge cards that were in fact focusing on offering convenience and prestige to affluent customers with little focus on rewards.
Wherever business takes you, Diners Club can help. At airlines, car rentals, and at the finest hotels in the world. When important business plans are changed, then it's imperative for you to be there. It's nice to know that Diners Club from Citicorp is accepted by practically all other forms of transportation.
Bob, how was your trip? It was a slow start, but a great finish.
Diners Club from Citicorp. You can drop our name where it counts.
However, as credit card usage became more widespread, banks and card issuers began seeking ways to differentiate their products and attract more customers. In the 1980s, banks started to introduce loyalty programs tied to credit card usage, with Citibank's 1987 launch of the AT&T Universal Card being one of the earliest programs to offer points for every dollar spent.
Excitement about this baseball team. They actually caught the ball when the other guys hit it.
It's our game. We love to see it, share it, and talk about it. The AT&T Universal Card helps make it all possible.
Now I know that you guys can make this dream a reality.
It's MasterCard and the power of AT&T.
Show them what we can do today.
The AT&T Universal Card. One world, one card.
These points could be redeemed for cashback, travel rewards, or merchandise. The growing popularity of airline frequent flyer programs during this period further fueled the development of credit card loyalty systems as banks saw the opportunity to partner with airline. Co-branded airline credit cards like the American Airlines Advantage Card, which launched in 1981, became a significant innovation, allowing card holders to earn frequent flyer miles through their everyday spending. By the 1990s, credit card loyalty programs expanded rapidly. Introductions of new cashback cards, point-based rewards, and co-branded hotel and airline cards increased significantly. Credit card issuers saw loyalty programs as a means of encouraging spending, increasing card usage, and boosting customer retention. Similar to the airlines, as these programs evolved, issuers began introducing tiered reward systems and offering perks like travel insurance, concierge services, and lounge access for premium card holders. In the 2000s, competition among card issuers intensified, leading to increasingly lucrative sign-up bonuses and more flexible redemption options. Today, Credit card loyalty programs are highly integrated into consumer spending habits. They offer rewards that range from travel and dining experiences to exclusive event access. With the increase in mobile applications, it's now even easier for users to track and redeem rewards, making loyalty programs a central feature of modern credit cards. So let's provide a refresher on how to apply for credit cards. When you apply for a credit card, there are several important factors you should consider to ensure you're making the right card choice for your financial situation and goals. Number one is your credit score. Before applying, you should check your credit score as it plays a significant role in determining eligibility for different cards. A higher credit score typically qualifies for cards with better rewards, lower interest rates, and more favorable terms. Many credit card issuers provide free reporting from or access to the credit reporting agencies for checking your scores. Number two is interest rates. The annual percentage rate, or APR, is the interest charged on unpaid balances. While some cards offer introductory 0% APRs for a certain period, this rate increases afterward. Cardholders who plan to carry a balance should look for cards with low ongoing APRs to minimize interest charges. It's also important to understand how the cards calculate interest, as this can impact the cost of borrowing. Number three is fees. Many credit cards come with various fees such as annual fees, late payment fees, balance transfer fees, and foreign transaction fees. You should evaluate whether the benefits and rewards outweigh these costs. For instance, cards with a high annual fee often offer premium perks, but if those perks aren't utilized, a no-fee card may be a better choice. Number four, rewards and benefits. Credit cards often provide reward programs, offering points, miles, or cash back on purchases. As you progress through these lessons, you will learn how to choose a card that aligns with those spending habits and goals that you have, whether that's travel rewards, cash back on groceries and gas, or points for everyday purchases. Understanding the redemption options and the value of rewards is crucial to maximizing the card's benefits. Number five, terms and conditions. Carefully reviewing the card's terms and conditions is critical. This includes understanding grace periods, how payments are applied, and any penalties for missed payments. In summary, choosing a credit card involves understanding your credit profile, comparing fees and interest rates, and selecting a card with rewards and terms that match your financial habits. Now let's talk about what's called the Chase 524 rule. The Chase 524 rule is a guideline used by Chase Bank to limit the number of credit cards a person can be approved for within a 24-month period. According to this rule, if you've opened 5 or more personal credit cards from any bank within the past 24 months, your application for a new Chase credit card will likely be denied. The rule applies to all credit cards, including those opened at other institutions and even some retail cards. However, it generally excludes business cards from banks that don't report to personal credit bureaus. This policy is intended to minimize risk by discouraging excessive credit card applications, which could signal financial instability. It has become a key factor in credit card strategy, especially for those seeking to maximize rewards or benefits, as it influences when and how often they apply for new cards to avoid exceeding the 524 rule. Sign-up bonuses. Credit card sign-up bonuses have become one of the most attractive features for consumers when choosing a new card. From a consumer's perspective, these bonuses can offer significant value, often in the form of cash back, travel rewards, or points that can be redeemed for merchandise, gift cards, or statement credits. For instance, a common offer might involve earning a bonus of, say, 50,000 points after spending $3,000 in the first 3 months of account opening. This could translate to 1 cent per point or $500 in value, which can be a compelling incentive. These bonuses can help offset the cost of annual fees or provide discounts on large purchases, travel, or other perks. However, you should be cautious about overspending to meet sign-up bonus thresholds, which can lead to debt and negate the rewards if interest accrues. It's also important to track application frequency, as credit inquiries can impact credit scores and potentially trigger restrictions like the Chase 524 rule. And there we have it. We've completed lesson number 2. We hope with this lesson, as well as the prior lesson that spoke about travel reward programs and the history of frequent flyer program, are 2 classes that you found beneficial already and are looking forward to our next lesson next week. If you could please click on that like button and leave any comments or suggestions you have on the topics that we've been covering, as well as anything you'd like to see us cover in the future. And as always, we appreciate it when you do subscribe, because that lets us know that the content we're providing is something that you look forward to seeing on a regular basis. Until our next lesson, great travels, and thank you for watching.